Welcome to FXpert Trading, where I use time cycles, median lines, and other technical analysis to identify trade setups in the US stock markets as well as the FX markets. If you like the information contained within this video, be sure to subscribe for more. I'd like to say thank you for all of you who have subscribed after this first month of making videos. I hope you're really enjoying this content, and I would really appreciate it if you could please give me some feedback in the comments so I can improve these videos. I'm new to this. I'm not very good at it. So if there's anything that you can think of that might make these videos better for you as the viewer, please feel free to let me know, and I'll try to incorporate that into how I make these going forward. One thing I am going to try to do this weekend, I probably won't do this for any videos I do during the week, but I'm actually going to split this up into two videos. I'll do one on the broader markets and then one on individual stocks. If you think that's a good idea, please let me know in the comments. If you don't like that and you think I should just do them all together as one video, please also let me know that in the comments as well, and I really appreciate it. Thank you very much. I hope you enjoy the video. This is the E-mini futures daily chart. And what you can see here are the time cycles. The orange cycle here is about 2 weeks, and the blue cycle here is about 2 months, and those are going to be the most important for what we're going to discuss today. I mentioned a video or two ago that sometimes the cycles shift around cycle peaks and troughs, and if you see, I have a lot of overlap of some of these 2-week cycles because there's a bit of uncertainty as to exactly where the strength and the true troughs for these cycles is now coming in. We may have shifted right here. And as you can see, both this 2-week cycle and this 2-week cycle seem to be pretty well respected at this point in time. And so what's actually happening is one of them, it may be this trough, is actually just a mid-cycle trough. I've mentioned that in other videos as well. And what that actually is a lower time frame trough that's just starting to become a little more prominent in this case. I don't have that cycle on here. It would be roughly 1 week. But it's not consistent enough to be traded, and it's also not reactive enough to help trade the 2-week cycle. So I don't monitor that. I don't keep that on here. If we look back at some prior cycles, you'll see it's difficult to find. Maybe this is it right here. We get a little bounce before we continue down. Here in this cycle, there really isn't one. Here you could say it's the return of some bullish momentum here. And then in this one, this would appear to be a mid-cycle trough for the 2-week cycle, or as I said a moment ago, a 1-week cycle. If we consider that a 1-week cycle, and this is indeed still the strength of the 2-week cycle, we could see we're getting another pretty strong mid-cycle trough here. But as I stated before, sometimes the cycles shift, especially around peaks or troughs, and we are coming into an expected peak. If we consider the possibility that the cycles have shifted and we give this 2-week cycle preference, we would then have a trough here, which would give this 2-week cycle our preference, and that would come in at Tuesday, March 19th, which, as I've mentioned in other videos, would line up with the expected trough in the Qs. So I think it's very possible that is what's happening. However, I think ultimately this is going to be determined by our reaction to CPI, as this 2-week cycle here comes in right around CPI, and that will probably either give us a big sell-off, in which case I think it would probably extend, or it can give us our trough, which would be around this 2-week trough, and perhaps that will begin the new 2-month time cycle. Either way, it's going to be very difficult to determine what's going on unless if we get a clear extension to this 2-week time cycle and to the 50 SMA. I have the 50 SMA here in blue, and you'll see I've used a blue line to kind of extend it. If we were to delete that for a moment, you'll see I kind of extended it just in the general direction that it is moving, because I think right now the 50 SMA is going to be extremely important. You don't hear anyone talk about this, and there is certainly no rule as to how often price needs to check in with different SMAs. However, I went back all the way to 2011 to check about how frequently we check in with the 50 SMA. Currently, it has been, if we measure the days, It has been 119 days as of Friday since we have last touched the 50 SMA. So by Monday, that will be 122 days. By the first possible trough, that would be 125 days. And if we get the extended trough, which is what I'm leaning towards, it would be 130 days. I looked back at all of the times we checked in with the 50 SMA, going all the way back to 2011, and what I found was only 3 times since 2011 did we not retrace to the 50 SMA in less than a 125-day period of time. In fact, using 125 days as the cutoff would be even a bit high. I think the next couple highest were all around the 110 to 115 day range. In the 3 instances using 125 days as the cutoff, one was exactly 125 days. The second was 130 something. I can't remember exactly what it was. I believe it was 138 days or 134. And the third time was 150 days exactly. And that last time is the scariest. We'll go take a look at that right now. We are back in September of 2017, and this is the last time that we have gone more than 125 days without checking in at the 50 SMA. You'll see we tagged it here on Tuesday, September 5th, and we did not tag it again until the huge sell-off that came in February of 2018, and that was 153 days. So earlier I said 150 days, it was actually 153 days. Considering there have only been 3 times in the last 13 years that we have gone more than 100, or that we have gone 125 days or more since checking in with the 50 SMA, I think it's highly likely that we will check in with the 50 SMA during this current 2-month cycle. Does this mean we definitely will? No. But again, in the last 13 years, this has only happened 3 times where we have extended longer than the current period of time without checking in at the 50 SMA, over 13 years. We're back to the current time period to take a look at what that would look like. Using the expected troughs, and again, these are just averages. It can come in a few days before, a few days late, and so that's true for whichever of these troughs is going to be dominant. That would suggest we should expect to come down, and again, this is on the futures chart, to somewhere around 50.25 to 50.80. Again, we don't need to, and perhaps it could play out like 2018, where we get a very shallow trough, a blow-off top, and then we get some type of crash or correction further out into May, which I think I briefly mentioned a couple of videos ago, as we have a longer-term cycle trough expected sometime in May or June. Another possibility for what could happen is we actually don't get this 2-month trough at either of these expected troughs, and what could happen, I'll just borrow this for now, is we could extend another 2 weeks from here or from here, and we don't actually get this trough out until early April. That is a possibility. I do think that's a bit unlikely. If we're going to extend, I think it will only be by this cycle here. But that is something we will have to keep in mind as we look for this potential correction. We're going to flip over to the SPX chart right now, as well as the Qs and the SPY chart, to try to determine if we can confidently say that the peak is in. Based on what we see here, we cannot. As I've mentioned in many videos, what I like to see is we take out the prior day's low. In this case, I would have liked to have seen Friday's low take out Thursday's low, but we did not. We're on the SPX chart now, and we can see Friday's price action did take out Thursday's low. Considering our proximity to the expected troughs coming up, that might suggest the top is in. However, I would prefer to see it across all markets, including the futures. This is the SPY daily chart, and again, we see the same thing as we did on the futures chart. Friday's price action did not take out Thursday's low. We're now on the Qs, and we can see Friday's price action did take out Thursday's low. So what I'll be looking for on Monday or Tuesday is to see that SPY and the futures both take out the prior day's low, which will now be Friday's low. Or if it happens on Tuesday, that will be Monday's daily low. We are now looking at the percentage of stocks above their 5-day moving average. I've used this in prior videos. This is something I like to use to help identify potential peaks in the 2-week cycles. When we get above 75%, we don't have to close above, just wick above. That can help us confirm, if not the exact top, proximity to the top. And we can see we did that 2 days in a row alongside what we see on these daily candles for the SPX and the Qs. It seems very likely that the top may be in, but we cannot be certain quite yet, considering the SPY and the futures charts. Considering the current uncertainty of whether or not the top is in and where the troughs may or may not come in, right now the best course of action, in my opinion, is to wait until after CPI. And what can be tricky about CPI is it can be the catalyst that creates a big sell-off and potentially sends us into the trough, or it can confirm that the trough is in by sending the market back up. In either case, I personally don't want to have any positions open. While it can go very well in your favor, it can also very quickly destroy your position. As always, thank you for watching this video, and be sure to subscribe for more.